Okay, guys, is this visible, guys? Screen. Hari Kumar, are joining this meeting? Or joined. Divya, Rishita,
Yes, sir.
can you audible?
Yes, sir.
Is visible screen?
Yes, sir.
Very good, very good. Okay, so today we are going to discuss the topic title is how to evaluate investment and their attributes. How to evaluate the investment and their attributes. Investment analyze investment analyze is simply the process of evaluating an investment in each attributes of investment. Yes, evaluation or investment involve evaluating the attributes of investment, return, risk, liquidity, tax benefit, and convenience are the key attributes taken into consideration before investing in any particular type of avenues or investment. Investment are evaluated to decide or choose the right investment. The investor has to analyze what are avenues available in financial market. At the same time, investment evaluating the attributes of investment like returns, risk, liquidity, tax benefit, and convenience. So these all aspects are also analyzed by the investor before investing in securities, investing in somewhere, or investing in financial institution, whatever it is. So before that, the investor has to evaluate what are investment types or avenues available in securities, especially in financial market. Yes, and one more that the investment are an integral part of any business. Already one webinar is also conducted last week. Uh, Investment securities, that means financial securities, the topic is also discussed. So that time I also asked one question. Normally the ordinary people does not aware that investment alternative investment security aspect. Only a corporate people or business people aware that investment avenue and investment securities also in financial market. Even they are dealing, the corporate people only dealing that financial securities aspect in the financial market. The normal people or ordinary people not aware that financial securities, how to invest, how to evaluate the investment alternative, how to evaluate that investment avenues are the also different aspect. Yes, investment are the integral part of the business. Every company has investment in many form, whether they are in project or assets. Yes, today most of the companies, most of the corporates are also has invest in many form, whether they are in project or assets also. Yes, income from investment has direct impact on the profitability to the company, and it's one of the primary responsibility of finance manager to effectively invest the company funds, optimizing its profit. Yes, so the major responsibility person is finance manager. So as a finance manager has to analyze the investment alternative, and finance manager that to effectively invest the company funds and optimize its profit. Yes, sometimes company earned more profit, surplus profit. After that, company decided invested some amount invested in some financial market or financial security market. So the optimizing funds, utilizing fund very optimizedly its profit also very important. Yes, funds are invested for short term or long term depending on availability of the business or idleness of funds. Yes, yes, short term or long term investment. That investment also depends on the availability or idleness of fund. To explain further, sometime company concern is to do the expansions, and therefore it looks out of the both acquisition and investment of funds. Yes, the finance manager has to utilize the fund optimum level in the financial security market. The profits also shared. Profits also utilized optimized in the or on the investment aspect. Yes, and one more point of view, uh, investment attributes. Yes, it is one of the major essence for effective investment. Investment alternative needs to be analyzed for already we discussed investment types, investment avenue. That means attributes. So following attributes of investment can be taken into consideration for evaluating the investment. Yes, why the finance man has to take uh, investment decision in financial security market? Something consideration. While investment on assets or securities, that will be followed, that will be considered for for return, for evaluating the investment. Yes, it must also the certain point of view also one of the considered. A good rate of return on investment is the first and the foremost condition for effective investment. The effective investment is also considered the effective return or good rate of return for their investment or on an investment. Yes, return also important. How to calculate rate of return? Annual income plus ending price minus purchasing price also less there divided by purchasing price. So annual income plus ending price minus purchasing price divided by purchasing price. Yes. So this formula is also applied to calculate rate of return. Okay. Next, one more point. Can you visible on the screen, guys? Guys, can I audible and visible? Please reply. Anyone? Hello. Sai Frank. Hello. Sai Frank. Darren. Abhishek. No one replies. Harshita.
Yes,
Yes,
sir.
sir.
Okay. So I think screen visible, ma?
Yes, sir.
Okay.
It is.
So for more in-depth analysis, the rate of return can be broken into two parts: current yield and capital gain or capital loss in the current exam. For example, rate of return 10% plus 15% equal 25%. For example, here the current yield is 10%, capital gain is 15%. Current yield is more stable compared to capital gain. Capital appreciation may not always be there. In bad markets, it is quite possible to have capital loss as well as rate of return equal to annual income, annual income divided by purchasing price plus ending price minus purchasing price divided by purchasing price. So this formula is applied. Actually, 25% is the rate of return. So actually, current yield plus capital gain. Capital gain already I explained. Capital gain. For example, have 10 lakhs invested in furniture. Furniture is also current asset. It's a fixed asset. That means also asset. 15% is also depreciation. The depreciation percentage is also calculated on furniture. For example, 1 lakh. How much 15 percentage on 1 lakh? 1000, 10,500 rupees. So 10,500 rupees is also depreciation value. That amount is also expenses entered in P&L account debit side. But actually, that amount is not spent by business people, only return, off. So 10,500 rupees is not spent by cash. So that is also 10,500 rupees also capital gain. That amount, yield amount, to total percentage added equal to total rate of return 25%. So when you calculate this, apply into this formula, rate of this formula. So return is also important. A risk, already risk, liquidity, tax benefit. Liquidity is also discussed. Return is risk is also discussed in previous class. These also investment evaluate of investment. So tax benefit. Sometimes the government offers government given some privileges to the tax benefit when you follow the business, when you tax paid at the time of business activities, tax benefits also available. It is true for some investment and not for all. Most of the countries have tax incentive for particular investment except tax-free countries. Sometimes if you are invest in fixed deposit, if you are invest in insurance policies, insurance schemes, so some percentage of tax is also uh, offered by the government, except some percentage of tax regarding to fixed deposit on insurance whatever it is. So tax benefits also available. One of the evaluation of investment. Yes, and one more convenience. Convenience also to be evaluated at the time of investing. Convenience means ease of investment. When the investment can be made and looked after easily, we consider it's an convenient investing. For example, it is easy to invest in equity shares compared to real estate because real estate involves to a lot of documents and legal requirements. Suppose if you are going to invest in equity shares, no need to more documents. So when you purchased equity shares, when you invest in equity shares also, automatically, so the dividend also documents also updated. Suppose when you invest in real estate, so most of the legal requirements and documents also available. So the convenience also most one of the evaluations of the time of investment. Okay, this is also important. This is only important. Okay, by this session, in this session only one topic discussed here. The topic means how to evaluate investment and their attributes. How to evaluate investment when you go to invest, when you invest in some asset or a financial security, whatever it is. So at the same time, you have to analyze the attributes, especially return, risk, convenience, and one more that especially rate of return and risk, and one more that especially liquidity, tax benefit, and convenience. So these attributes are also analyzed when you invest on security or assets or financial institution or whatever it is. Okay, this is also one of the major points included into evaluate investment. Okay, just let's back to meeting. Just we can stop the recording. Okay, stop recording.